All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Yesterday was a really interesting day in the market. It gapped down, right? We saw the gap down in the market, and yes, the indexes were red. So you turn on CNBC and they show you, how the sectors are doing, and everything's red, 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 red. But it was a sell day that had monster volumes come in the morning, and then the volumes just kind of went out. They just kind of left. In fact, if I pull up S&P futures, we go and kind of look at it, you could see the really heavy volumes, in the morning. And, the entire day overall was higher volume. But generally, what you're going to see, when you have this type of very, very high volume, is you're going to get some big volume later on. And all throughout the afternoon and all throughout even the close, the volumes just kind of dried up. And yeah, we had some volatility and some shots down and shots up and 20 point up and 20 points down all over the place yesterday. But it wasn't something where the volumes really started to accelerate in any major way to that downside. And so we saw the massive volumes come in right here on this down, and then this snapback volume really come into play. And that is, as we talked yesterday, that's the type of action you tend to see, when some sort of bottom is being put in. And when you look at the day in the entire, as a whole, right? Was there more buy pressure or sell pressure yesterday? I get it. You turn on TV and, oh man, things are selling. This is the worst market ever. This is crash territory. Where we're going down another 50%. It's all of that chatter, all that talk. But really, was there more sell pressure or more buy pressure yesterday? Well, if you go outside of tech, you take a look at stocks. I'm just going to use FedEx for an example. Was there more buy pressure or sell pressure in FedEx yesterday? It wasn't much of a sell day for it. Yes, it gapped down. There was a price change because of how futures reacted. But was yesterday really a sell day or a buy day? Look at Boeing yesterday. Was yesterday really a sell day or a buy day? Was there more buying or more selling in Boeing yesterday? There was more buying. And in a lot of stocks out there, there was actually more buying than selling yesterday. Now, in tech, even some of the old tech like IBM, there was more selling than buying. In something like a Pepsi, which, had a really, really heavy reversal yesterday, there was more selling than buying. But you go into an Amazon yesterday, was there more selling or buying in Amazon yesterday? Right? Well, yes, the stock was down yesterday, but was there more selling or buying? Micron yesterday, was there more selling or buying? I mean, these are big tech components. And you look at the buy volumes that came in, they're massive. They're enormous. And yesterday's market was very interesting because on aggregate, when you look at a lot of different stocks, there was actually more buying that happened than selling. Now, market isn't going to be able to hold up when Apple is getting sold, right? When Apple's getting heavily sold. But if you go and you piece the volumes together yesterday, there was actually more volume on the upside on Apple yesterday than there was on the downside of Apple yesterday. Which is pretty remarkable. One area where that wasn't the case was energy. Definitely more downside volume than upside volume, but not to a massive degree. Not to any kind of real hefty, mega scale. And so while the indexes looked ugly yesterday, and yes, the market was down, and yep, it was slightly lower than where it opened, there were a lot of stocks yesterday that actually saw more buying than selling come into play. One of the things I've been interested to see this morning is, do we see more selling come in? Yes, we're gapping up, right? But a gap just creates a price change. A gap isn't buying and selling. You hear people say, well, there's always a buyer for every seller. Not at every price level, right? Not at every price level. Yes, if you're going to go sell something, there's got to be a buyer there, and the market makers take most of that. But there's not one at every single level on every single stock. And the gaps are what kind of, where that vacuum is. And so today we gap up in the market. Great. The indexes are going to be green, right? Stocks are going to be green. But is there more buying or is there more selling taking place, right? Today tends to be a lower volume day ahead of tomorrow's holiday, Thanksgiving holiday, right? That's typical nature. But if we come into some of the big stocks in the market, the Apples of the world, is there more buying or is there more selling? I know Apple's green. It's up, right? It's green, but is there more buying or more selling? Overall, on aggregate today, there's been more selling. Amazon, it's up today. Has there been more buying or more selling? It's been about even, right? We're not seeing this kind of mass buy-in going on here. Here's Microsoft, right? From where it gapped, it's only slightly higher. Yep, there's been a little more buying here of late, some decent volume. So this is one there you go, okay, maybe a little sign of life. What about the banks? Has there been more buying or selling? I know Bank of America's up, but has there been more buying or selling? There's been more buying. There's been more buying here with this stock. Bank of America is one of those stocks where, there wasn't actually more selling than buying yesterday. In fact, if you put the volumes together, there was more upside volume than downside volume. And so Bank of America, we're seeing a little more in that. Here's CSX. Yesterday, CSX got hammered at the open, massive volume, and then just hung out. Today, no real volume, pretty much kind of where it gapped. Yeah, a little bit higher, but yeah, okay. Not something you can really read into and say, wow, there's something, massive here. What about small caps? They're more buying or selling today? Absolutely more buying. Absolutely more buying. This isn't something that just gapped on up and is sitting here and it looks pretty because it's green. This is something that is seeing continued buying throughout the course of this morning, throughout the 2 hours here. Something like an FCX. Yes, it gapped up, but it is seeing continued buying. This is something that's, getting bought more than sold, where something like an Apple still getting sold a little bit more than bought. On aggregate out there, when we look at the more aggressive stocks, we look at, some of the industrials and some of the tech and some of the, consumer discretionary type names. There's more buying going on than selling, but there's still plenty of Boeings out there. Now, there's still plenty of Boeings out there where, yes, yesterday there was much more buying on Boeing than there was selling. All right, there was much more buying than selling. But today, there's more selling than buying going on. Yesterday there was more buying than there is selling today. But we're not seeing this gap in all the names really being brought up with any sort of vigor outside of these small caps and a few other names out there. So it's very dead cattish in a few ways. But if you put it with what yesterday was, and, yes, I get it. I saw the headlines. I saw the news. I get it. I know how oppressively bearish, all of those different headlines were. But at the same time, it wasn't price action that corroborated the headlines, right? It wasn't that same type of activity, and today is a decent bounce. I would be very surprised not to see the gap fully fill here. Yesterday in the news feed at the close of the market, I just wrote, my suspicion is this market has a 60 to 80 point bounce in it over the course of the next, several days. And, today, Friday, and into, the beginning of next week. And I don't know that bounce is going to change the metrics or, anything like that, or we'll be able to say after a bounce that it's not going to get sold into or something like that. We'll see what the bounce ultimately looks like. But, with the more buying in some of the key areas yesterday than selling, yesterday definitely looked a little bit overcooked, overdone. Now, it's one of those where we're not seeing option values compress too much today. The VIX has been falling, but you can see it's it's still a little elevated. It hasn't been falling to the same degree. In fact, the VXX is lagging the VIX, and when you see the VXX lagging the VIX, generally what's happening, this is a VIX futures element that's creating this, but generally what's happening in the market is option values are not compressing in a huge way. They're compressing a little bit. And so what happens is the risk of flat is still very high. And that was one of my big concerns yesterday, is that I could go out and buy a Bank of America, but would my option really appreciate in value? And if we come and look at the Bank of America options, right, we'll come in and they trade actively enough that we can look at them. But we take a look at something like the 27.5s here on Bank of America. It's definitely moved, right? It's definitely moved. But, here we are into the close yesterday, 53 cents. And today, right now, it's at 53 cents. Wait a minute. Bank of America stock is up 1% today. It's up 1% today, and the option value is the same as it was at the close yesterday. There's a lot of that out there right now. Now, if you go deeper in the money, you don't get that same element, right? If we go a couple strikes into the money, we're going to see, and these aren't as traded as actively, but we can see that, yes, there's a little bit of appreciation in value there on them. Let's go to the 27s. There'll be a little bit of appreciation in value here, right? They closed yesterday at 80 cents, and they're trading for 90 cents today. So there's a little bit of appreciation in value. But can you imagine what these options would be worth if Bank of America were flat today? Yeah, they'd be down 10, 15, 20 cents. And that risk is very high out there in so many of the names out there. What do you think is going to happen to UTX options today? UTX options today are just going to compress. Their bank or Boeing options just compress. And, I have some FedEx, and yes, there's compression risk in that. There's absolutely compression risk. And so I'm willing to take some compression risk, but I'm not willing to take a lot. And when I look at the market and I go, okay, I could buy Bank of America. I can be right that it goes up. But, man, if it just goes up 25 cents, I'm not making any money. Ugh. Give me a break, right? Now, does that mean that you can't buy Bank of America going forward and make money on the next 25 cents? No, right? Because what happens is when we get into these lows, when we get days like yesterday where the option values, surge, we get that element that needs a day to kind of come out, needs a day to wash out, sometimes 2 days to wash out. And that's why you often hear me say bottom picking, if you're trading just straight call or put options, bottom picking is a fool's endeavor. Because even if you're right, unless you just absolutely nail the bottom and you get a really sizable bounce, you're not going to make money, right? And for the risk, is it really all that worth it? So after this first move is where we tend to see option values become reasonable, and where we tend to be able to say, okay, now is there a decent risk-reward scenario here overall? And, with a lot of things, As I look at them this morning, I looked at the gap this morning, and basically the gap, I kind of said, you know what, the chances of this boat racing higher and me missing out are very slim. So I couldn't really jump in without that risk. The one that I really liked that I mentioned in my note this morning was Las Vegas Sands, and unfortunately, it just opened up and flew. It never really opened up and paused for a second. And by the time the option values were open, it was too late. Here you can see it. You can see it opened up right here, and by the time the option values really got to be semi-tradable, it was at 52, and then by the time the option values really kind of came in, it was about 52.20, and yeah, it's up about 50 cents from that point. But my risk reward element kind of went out the window with that. So there were a couple of these types of things out there, but a lot of things have been a little more Bank of America like here today in terms of how it's in terms of how they're moving. So I didn't add exposure, but I do look at these gaps and I say, okay, is this a window to ultimately add some exposure? Because if we come into an Amazon, we come into an Amazon, we have a very interesting pattern here. And this is what's referred to as an island reversal, right? And what's an island reversal? Well, an island reversal is a stock that's been drop, and then it gaps down. Gaps on down. And generally, there is big volume on this day. Okay? There's heavy volume on that day. Now, an island reversal can have the next day here, next day here, next day here. It can last for months. It can last for a day. But what happens with an island reversal is generally you get this gap down, and then at some point in time, you get a gap up that erases that gap down. And we've seen this with a lot of things, here today, where the gap up has erased yesterday's gap down. Amazon's a great example, of that. We saw this with Amazon right back here. Yeah, right back here. It took place. And we're seeing a lot of that come into the market here today with these kind of, a little bit of erasers here. We look at something like an FXI, which is generally gappy, right? Because of, it's going off the China market that trades overnight. But, you can see yesterday's action completely reversed. This island reversal element, in play with it. And we tend to see this at tops and bottoms here on the FXI. You look at these upside islands, right, that have these gap reversals that come into them. That's very, very common to see, and we've seen the downside islands here as well. So, FXI, I will admit, is one of my favorite entries out there right now. But anytime I'm going to trade the FXI, I'm not really going to buy it in the morning. I'll wait till closer to the close of the market. But, definitely has that action when we look at, we look at things like a Honeywell. Okay, do we have that action? No, we don't, right? Some of these industrials just doesn't exist in. Boeing was close, right? But it's given up here, at least so far today. If it were to rally on back and, it erases completely yesterday's gap, it would technically be an island reversal. But some technicians would argue, hey, you don't need it because yesterday's action was so bullish. Was so positive, right? I know Sky was falling yesterday, market down yesterday, but yesterday's action was so positive in terms of drawing many more buyers than sellers. So, we have some of these island reversals going on out there. A Nike, for example, is one of my absolute favorites. It was one where I priced out the options this morning, and I just said, no, I can't do it yet. I can't do it yet. Later in the day, okay. But, we've seen the option values come on down, here since the open and deflate here just a little bit. They're not exactly the best option values out there, period. But it is something where they're tradable. They're tradable. There's something I think there's some value in, and I expect Nike to snap back to the 75, 76 level, and this island reversal that it has right here, I'd be able to trade it off of 71. Sets up very, very nicely, and so these 72 calls or even the 72 and a half calls, I'll be looking to trade into the close here with Nike. So we have some of these island reversals setting on up here today. It's not en masse, but they are there. They offer a really nice risk-reward scenario. And, let's face it, the S&P has fallen from, 282 down to 264. That's 180 points on the S&P in a matter of less than 2 weeks. I mean, just to see an 80-point snapback, like I mentioned yesterday, that's not even going to bring it back and erase most of the loss, right? But that's kind of the norm in these types of chop environments. I still contend that what we're seeing in the market and what we've seen in the market here over the last week is much more similar to right here in March and April than what we saw right here in January, February. Doesn't mean that things are bottomed and going to go straight up, or there's still going to be ups and downs and chops and all arounds. There's still going to be the fear elements out there. But I think there's a lot more of a lot more of a support level in where we are now than what there has been. I think fund managers are able to start to say, look, there's some value out there. There's some value. Yes, there are some places where there just value doesn't exist. It just absolutely doesn't exist, where you have to be a little bit worried. But, we start seeing money coming out today of utilities. We start seeing it come out of consumer staples, right? It's one where these sectors need to fall for the market to go up. They absolutely need to fall for the market to go up. Pepsi needs to fall for the market to go up. Coca-Cola needs to fall for the market to go up. These had great topping signs yesterday. I mean, these were awesome topping signs. Would I have preferred a little bit more volume? Sure. But the volumes on the reversal were strong. They were very, very strong. Now, anytime we talk about topping volumes, right? I mean, we can go back to Micron, where, there was topping volume right back here, right? It doesn't mean you go buy a weekly put option and say, I'm going to make money, right? Eventually, or oftentimes there can be kind of a little bit of, brief rebound before a more major breakdown. I've been staring at Pepsi since, yesterday morning, going, okay, where do I buy puts? Where do I buy puts? Where do I buy puts? And, I just haven't had a risk-reward scenario that I like yet. So this will probably be something where I look to buy puts into a rebound or rally back to 117.5 or 118. But in the meantime, I'd rather play with Nike and play with FedEx, than play with Pepsi, where it is exactly right here, or where all those different stocks are right here and right now. Now, speaking of FedEx, I held it yesterday. I know for a couple of you it wasn't a popular decision, but again, you don't have to, you never have to do what I do. But I'm just showing you what I do. FedEx opened up, about $1.80 today, rallied, was up about $4.50. Now it's up about $3, kind of just sitting here up about 1%, trading a little bit with the market. I would like to see it outperforming a little bit more, right? I mean, naturally, I'd like to see that. It does, though, today's action does a couple things. Today's high, that gets broken, it's a great add point. It's a great add point here with it. And it's one that I will be looking at and saying, okay, you know what, if I get that, do I have a chance to go and add, probably with a little bit of a different option, but has a great add point, on a break of that. And then, number two, we have that, we have that kind of gap up this morning that is gap above that 7 hours, so creates a much more bullish hourly chart here. So I'm not overly concerned about a massive reversal on it today or something of that nature. But as today progresses, now the volumes are probably going to lighten up. Okay, we're probably going to see some heavy volume right at the close, but in terms of its directional implication, probably won't have a lot. I think we've seen about all the directional implications that we're going to see here today. And so now it's just a matter of, hey, you know what? You got the directional implication. I got my directional implication here with Nike. Do I like my option value? How much exposure do I want? Do I want to make it right here, right now? Do I want to make it closer to the close? And for me, you know what? I have FedEx, and so I'll wait for Nike into the close here today and go from there. There will be some time decay with the weekend and how that all goes, but most of that's already priced in. There'll be a little bit more that gets priced in this afternoon. Markets will be closed tomorrow, and then they will reopen Friday, and they'll be open for 3 hours. They'll open normal time, and then they'll close 3 hours later. It's one of those things where, why do they open? Why do they open on that Friday? Why not just close? Well, because the New York Stock Exchange, how do they make money? How does the NASDAQ make money? How do the exchanges make money? They make money when money changes hands, when trades happen, right? So, yep, they'll close for the holiday, and yep, they'll close. They'll have a shortened session. They're not going to miss a chance to make some money there, right? And sometimes those Fridays, they can be incredibly eventful. They can have huge moves happen, and sometimes they can be absolutely on snooze. We generally see one or the other. One extreme or the other come into play. I think the risk of an eventful one on Friday is much greater than a yawn snooze one, but I don't think it's any kind of foregone conclusion here. I think we might be in for kind of this market bounce where, after 2, 3, 4 days, markets bounce to 80 points on the S&P, and everybody looks back and go, wait, when did that happen? Right? Because, not paying as much of attention with some of the holiday and not really driven by a lot of news and just kind of sneaking on a little bit higher. Thanks for hopping on. Have yourselves a fantastic Thanksgiving. Hope you're safe, family, friends, and I will continue to keep my thoughts posted on the feed here today. So look for them there, and then I'll be back on video here Friday morning, and we'll go from there. Take care.